So when you search housing market on Google, what do you see? You see a lot of headlines saying the housing market is going to crash, you should not buy, and being a buyer in the seller market is insane. Now, I feel like this is creating a lot of fears for potential home buyers. If you are thinking about buying a home in this market, please watch this video. I hope to educate you on why not to listen to those experts and why you should buy a home in this market. Even in this market, we have clients buying properties for a flip, clients buying properties to rent out, and even clients buying a home for the first time. In the next video, I'll be going over why you should not buy in this market. So stay tuned for that. If you want to know sooner, please text the number and I'll explain everything to you. Now, let's get into the 7 reasons why you should buy in this crazy market. Reason number 1 is low interest rates. You probably heard this throughout the news, but yes, it is true. We are at a historically low interest rates. You can see in this chart from the past 50 years, we are in fact at a low. In May 2021, the 30-year fixed mortgage rate was around 2.95%. Now, why is that important? It's important because it allows you to save money in the long term. Let me give you an example. If you were to buy a house back in 1980s or whatever, which isn't that long time ago, your 30-year fixed mortgage rate would have been, guess how much? It would have been 18.44%. They were definitely taxing us right there. Compare that with today's rate, right, of around 2.95%. Your monthly payment would be a little bit over $1,000. And for 18.44%, your monthly payment over $3,700. That is a difference of almost $2,700 a month. That savings monthly, you will be able to afford a $500,000 house with that monthly savings. Some of you might be saying, well, we're not going to hit 18.44% anytime soon. Okay, I get your point. But in 2018, which was 3 years ago, only 3 years ago, it was at 4.75%. With that amount of savings, you would have saved around $250 monthly. Trust me, that can go a long way because you can probably buy a new car that comes with your new garage. And I will include the charts down below so you can click around and play with it, see all the interest rates throughout the years, and you can see it to yourself. Reason number 2 is that you have a stable job. When it comes to buying a house, your income is one of the most important aspects, and your credit score. If you have a good stable job, been there for a while, and you have a potential to grow in salary, you would not have a problem buying in this market. Even if the prices of homes increase by, let's say, $20,000, that would increase the monthly payment to only around $100. You would need like $1,200 to take that hit. But data shows that the average salary from last year increased by 7%. $1,200 of a person that's making $50,000 is around 2.4%. And for a person that's making $100,000, that's even less. Third reason is that you have money saved up. This is a no-brainer. If you have cash, assets, Bitcoin, Dogecoin, whatever it is, saved up, you'll be in good shape to buy in this market. You might be asking why. Because if you have money, you can put more down towards your loan amount, and your loan amount will be less, your monthly payment will be less. Also, with that money, you can put more towards your earnest money deposit, right? Which makes your offer a little more attractive than all the other people competing. Not only does having extra cash save up helps you buy a house, but if you want to save it for a rainy day, you can. Reason number 4, if you're planning on staying in a home for more than 5 to 10 years, then buying this market should not be a problem, because buying gets cheaper and cheaper the more amount of times you stay than renting. Alright, so look at the chart by the mortgage reports. After 5 years, you'll be spending around $122,000 for a home, including mortgage, private mortgage insurance, homeowner insurance, and taxes, etc. Now, if you were to rent a similar home with the same amenities, right, it would cost you close to $155,000 after 5 years. That's the rental cost, okay? That is $32,000 of a difference. And you know what you can do with $32,000? On family vacation, weddings, buying another house, investment properties. You can do a lot with that money, okay? It might not seem a lot, but renting can be very expensive the longer you rent. You might be saying, Van, why can't I rent somewhere cheaper? Well, you can also buy somewhere cheaper. The point is, the longer you plan on staying in the home, you should consider buying. Now, if you're like freaking moving around, you like to travel a lot, you want to live in a van, of course you should not buy a house. Fifth reason is appreciating home value. Throughout the US history, no matter what recession that we have been through, the housing market has consistently increased. Even in a recession of 08, 01, 1990, and even through the Great Depression from 1929 to 1933. Even if the housing market does come, please do not sell your house right away. If you hold on to it, you will be on top once the market is hot again. Because history has shown that it's been going up and up. Reason number 6, people think they should just rent. People might not know that the rental market is even crazier than the buyer's market. Well, let me show you. If you look in MLS for homes available for rent in Baltimore County, there's only 82 homes available for rent. Now, if you look at homes available for sale, there's around 942 homes for sale. So there is 11 times the amount of homes for sale than there are to rent. 7th reason is that you need and want a home. Rather it's because you're relocating, your kids got into a good school, you want to be close to your family because of everything that's happened. You want more backyard space, you want a bigger garage. So those are the things that you need and want. And if you really want it in this market, you can get it. No matter how crazy the market is, if you're with the pros, you'll be able to get a house and you will fight for it because you want it. If you're half-passing everything, you should not buy in this market. If you're like kind of thinking about it, then you shouldn't. Conclusion: no one knows what's going to happen. Despite what the media says, despite what realtors, lenders, friends, family, no one knows when the market's gonna crash. What we do know is the present data. Interests are low, you know your personal situation more than anyone does. So you gotta take what the media says, what other people say with a grain of salt and make your own decision. The last point is that everything depends on your personal situation. No matter what market we're in, even if it's buyer's market, seller's market, no matter what, you gotta compare it to your situation and what you want, what you need. Now, if you need help, you should get with a local financial advisor, right? To review your situation, your financial, get with a lender and get with a real estate agent to help you plan for what you want. Even if you're not sure you want to buy right now, they can help you to get to where you want in the future. Alright guys, so if you're new, please like and subscribe for more tips like this. It will help me out a lot. I made a YouTube channel before, but I'm starting over. I finished school, I graduated, so congrats to me. It was really exciting. Now I'm a full-time agent. Have helped clients throughout the year. I'm in the process of helping more clients sell and buying, so it's exciting. I'm glad I'm back in the game. So peace out, love you guys.